Okay, good afternoon, everybody. Today is Friday the 17th. Here is your weekly take on the market. It's about an hour before the close. Due to scheduling, I have to start this a little bit earlier. It'll be very brief. There's not that much that I felt like was pressing. Today's not that great a day in the market. We'll discuss that. I'll be your host. My name is Scott St. Clair. I'm the Premium Product Group Manager here at Investors Business Daily. Here is the disclaimer. We are not licensed, so anything we say is not considered a buy or sell recommendation. We will try to talk about individual stocks in the market and strategies, etc. But it's more of a research. We're trying to help you learn to fish on your own. So here are the gauges. I wish there was a color between yellow and red. There probably is on the spectrum, but I don't like the market here. I think the market is very tired, very sloppy. It'll go up and then it'll get hit really hard and then it'll come back, but then it'll get hit really hard. And it's been going on for a number of days. It is what it is. I'm not a big fan of the overall market, but there are some leaders that are acting good. That if you're trying to hold on through thick and thin, you have big cushions and you want to try to capture that big lead, you're gonna have to sit through some market periods like this. There's just no other way. It's not that easy if you're gonna have a longer holding period. If you're a shorter term trader, then you've probably moved mostly to the sidelines in the last few days and weeks because of the action. Portfolio, I guess it just depends on how invested you are. I'm not really getting hurt, lightly invested. I had some winners last week and a couple of stocks I gave back some of my gains, like MRVI. It's announced as a secondary and stock gets torched. I think that was last week. So I'm just basically right in between in the last couple of weeks. So we'll go through the markets. We'll talk about the industry groups. Then we'll try to discuss 3 stocks, maybe 4. I don't know what's magical about 3, but I think we should pick 3 and we've stuck to it. I'll show a few stocks and then we'll get into the quote of the week. So here's a chart of the NASDAQ. Let me fit this to screen. This is not real time. So this is about an hour and a half or so before the close. The volume is not updated, so keep that in mind. For more of a real action, you can see the QQQs. Volume is up. Probably, I'm pretty certain today's going to be a distribution day. It's just a matter of we have another hour here, and the NASDAQ is down over 1%. Seems unlikely it's going to come all the way back, but you never know. So you can see all of this red over here, and it's not really going down a lot, but you're getting a lot of red days. It's having a hard time making progress. Let's go to the S&P. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Last 10 days, you've been down 8 of them. Very unusual. If you go back and look at this, you won't find anything that resembles that. Now, they're not terrible days, but if you're an institution and you're trying to, distribute stock, you're trying to do it as quiet as possible. You're trying to tiptoe out, and sometimes they can't. Like they try to tiptoe out, and then it's just all of a sudden it just cascades, and then it becomes okay. Let's just start getting me out. So maybe that's what happens, but I don't know. I really don't know. I tend to proceed with caution when it comes to the indexes, but there are some stocks that I really like that I don't want to sell, and so I'm torn between the market action, which is very important, and the action in the stocks that I'm holding that are holding up. We can look at emerging markets. Not that great. IWM. Just it's kind of a nothing. This is the strangest index to me. Sometimes I'll see like IWM is up on the day and the NASDAQ's down and vice versa. I can't explain it. I don't do much as far as this index, that's for sure. Some of the ETFs that I follow, ARK, ARK is actually up today. Tesla's not down that much. Maybe Nvidia is, it's not down that much, a whole 1%. So you can see it's hard to be bearish when the leaders like Nvidia and Tesla, they don't look broken, so it's just very subtle signs that I don't want to overreact to. But if it were to roll over this market, I'd be upset that I didn't heed the warning of the subtle signs that I'm feeling that something's not right with the market. So, how I combat that is by being lightly invested. I'm not going to take a bunch of chances in a period where I don't feel I've got an edge, so to speak. Okay, so let's get into the industry groups. I think I have them down there already. No. Energy, coal, still one. It's been really good moves off the bottom. Finance, consumer loans, UPST hanging like a champ today, hit 300. Semiconductor, retail department stores, retail's held up really well. Computer tech services, Task is part of that group. That's been a really big winner. Transportation, ship, Zim, a couple of other ones are hanging up. Computer software security has done really well. You've had a couple of big moves in some kind of lesser names recently. So the industry groups are not that bad. I like the texture of the industry groups, but I'm not going to do a whole lot with coal. UPST, I'm not in any longer. So, but you want to be fishing in the right groups. In a bull market, the first group is usually you're late, right? It's gone. The stocks have gone. If you get into a correction or a bear market, then these groups up near the top will be a great potential merchandise because they're going to be the ones that don't really want to go down, or they're going down reluctantly. Let's look at some stocks. DVN, which is an energy stock. I would include 3055 as a pivot. So it looks like it tried to go above it today, I think. But it's hanging in there. Let's go to the weekly. I'd really like the relative strength to improve just a little bit if it were to break out, go above the new highs, but it's a name building a base, huge quarterly earnings. That's been the for these energy stocks like Denbury and Devon, they've got these big earnings in the most recent quarter. These are turnaround plays. This is another one. This looks like a cup with handle to me. Maybe above 75.20 is probably where it would break out, but it's hanging in there. But I would like to see the relative strength improve a little bit. And then on the more speculative side, Valaris, which is a offshore oil drill, they do really well when oil does really well, right? Because it's very expensive, I imagine, to drill offshore. New CEO. Let's go to the daily. You can see that a little bit better. So you've got an insider buy, and breaks out of this double bottom right there at 28. So no earnings and sales just yet. Potential turnaround, but the stock is acting really well, which is interesting to look at the relative strength line in the last handful of days. I can tell you this was probably around 50 or 60 when that happened. It wasn't. The relative strength number was not that good. So it's really improved because it's made headway in a market that has not. So you have the combination of S&P going down, even though it's a little bit, and Val going up. That's going to really juice the relative strength. And then GPOR, I think, hit the RS line blue dot list today. Go to the weekly. You can see. So I don't know. It's really hard to judge, who the leaders in this group. There must be a reason that they all exist. They must do something slightly different. Sometimes in groups like this, like gold or oil, if I want exposure to that, I really struggle with like who's the leader. So I might buy a little bit of all of them. So if I'd normally have start a 10% position in the leader, I might buy 5% in two of them. Or if I really like the group and I want two of them and I've got two 10% positions for 20% exposure, I might buy three of them at 7% or something like that. And then see what happens. Wait and see which ones move up and keep those, maybe add to them. And if the other ones just are lackluster, you can move out. But it's really hard to know, at least for me, what separates the leaders when there's no earnings and sales, and the product and services are a little tougher to differentiate. Boot, hanging in there really good, building this little flat base. Great quarterly earnings, accelerating here. Deckers looks very similar. I think Deckers actually did break out. Yeah, yesterday. Tried to go up today, but the weight of the market might have pushed it down. But that's acting really well. And DKS, although it's in retail leisure products, I think of them as a retail store. I just went in one yesterday, in fact. So that's another one holding up really well. So there is some stuff that's holding up really well. It's just a matter of if you have them and you're trying to hold them, or getting those correct buy points. All right, so let's go to the quote of the week. Since this is going to be quick and simple, the quote's pretty quick and simple. Larry Hite, Market Wizards. It's incredible how rich you can get by not being perfect. I like that quote because the market's hard. It's everybody wants that perfect buy point, and they want to have perfect earnings and sales and a return on equity, and they just want all the moons to be aligned because as humans we like that. We crave certainty, and there just isn't any in the stock market. So you don't need to be perfect. You don't need to buy it perfect. You don't need to sell it perfect. You don't need a perfect stock. I own stocks like VAL, which is far from perfect. I'm not worried about it. I know where I'm wrong, and I feel like there are some factors that are really strong, like the price of oil is holding up really well. I mean, oil was negative, not that a year ago or so. Now it's $72 a barrel. And it looks like it might be coming out of a really long base. So I want to be there if that were to happen. So you don't have to worry about perfect. And, there's so much meat on the bone with some of these stocks: Shopify, Square, PayPal, Facebook, Tesla. And if you get them wrong, 50% wrong, boy, that means you capture 50% of the move. Or something like that. So try not to beat yourself up. I get this a lot from people, and what about this? What about that on the stock? Or, well, Ken Slim says the stock has to have this, and it's, you're right. And the nice thing is you can pass. If you don't like the names, you can just pass. But I think you want to be flexible and not be so worried about being perfect in the market. It's a difficult game, and there's a lot of uncertainty. It's so much imperfect information that you're just constantly making changes every day, every week. It doesn't mean your evaluations, I think, is the better word. I'm constantly evaluating my portfolio. I'm constantly evaluating the markets, constantly evaluating the stocks I want to be in. It doesn't mean I'm doing something about it every second, but I'm always observing and trying to see where there's strength, where there's weakness. Are there stocks that I own that need to be reduced, stocks that I own that need to be added to? And I get it wrong a lot, but every once in a while, boom, you get it right. And those moves make a big difference to your portfolio. All right. Have a great weekend, everybody. Here is our contact information. Reach us at marcusmith.com, 800-831-2525. Those are our Twitter handles. I don't tweet that often, but I am on Twitter. And I don't know how often the Marcus Smith team tweets either. We're, going back to the compliance. I often don't tweet due to, I think about, can I say anything about that due to compliance? So have a great weekend again, and we will see you next week. Bye, everyone.